Hello, everybody. Economic Ninja here. I hope you're doing great. I have more information about a new bank. Not more. I have information about a new bank. I honestly cannot tell you the name of the bank just yet. I have not fully gotten permission because of the person sharing this information with me. There's a relationship with somebody very high at the bank. I'm going to dig into this bank a little bit more, but I'm going to tell you the information, a couple of memos that were put out, and a little bit of information about what they're doing in the realm of CMBS and how dire it is. And what the more important part is that people high up at this bank don't even have a clue of what's going on. But when you hear this information, you're going to go, how do you not have a clue what's going on? So I've got to dig in deeper into this bank, get more information and some specific permissions, but I can share with you the email that I was sent and the two memos. Okay. And I'm just going to take out the name of the bank. This is a bank that I have not, it is a well-known smaller bank, but it is not a massive bank. Another thing I want to do is at the end of this, I'm going to answer a question I get so much, and you're not going to like the answer to that. And that is what happens to your mortgage when your bank collapses. Okay. Whoever's owning the note. All right. So, not the note, sorry, you know what I mean. All right. I'm diving into this and thinking about all of this right now. All right. As before I start it though, I want people to understand this is a big problem. This isn't fear mongering. The Federal Reserve said themselves in the spring that last September, right before the end of the year of the Shemitah, going into the year of Jubilee. And it's a very important time marker that over 700 banks came to them and said they were essentially insolvent. All right. The facts that we know are that the Federal Reserve said that the repurchase window has been wide open and they have been having to deal with liquidity issues from hundreds of banks. They are breaking records of the amount of money they're having to lend out to these banks to keep them solvent. And that the other fact is that the FDIC not only said that they were done, that they're tapped, that they need more money from banks. And the Fed says, well, don't take it from the regional banks because they're hurting so bad. Take it from the big banks. The big banks are crying. And then a leaked video from November of last year from the FDIC, a meeting in the FDIC, they said, the banks are collapsing. We cannot let this get out into the public or the public will panic. All right. You are getting to see this crash, which was worse than the Great Recession, just like I said when I started this channel. I'm going to bring you through step by step through an economic crash and get you ready and show you how to be prepared and not scared and then take advantage of this because there's no stopping it. There's only the ability to take advantage of it. The banks and wealthy people, the elites, the billionaires around the world, they want to take advantage of this. I want you taking advantage of this. Right. So here's the story. Oh, real quick. For everybody that has the real estate crash course, I just uploaded a new lesson under the bonus content just now before this thing went live. Go ahead and take a look at it. And because of this awesome news story, I'm going to throw 10 more discount links, 80% off. So they're $199, the course. Okay. Once you're in, and new lessons keep stacking in. Okay. Here we go. Hold on really quick. This is a super chat and I got to answer it real quick. How do I get my voice out? I don't have a YouTube channel and viewers. How do I get my corruption info out? I'm a whistleblower. How can I contact you? I get so many emails a day. It's insane. But my email is, if I put my email link out, it's going to get hammered with 1,000 emails and I probably won't even find it. It's ninjabrohawk@gmail.com. Send it to me and let me know. But I'm going to be honest with you. There are so many emails. And this is the email that I'm going to share with you right now. It's so hard to go through the emails each day. I'm just one person. I don't have a team of social media people to go and, put me out everywhere. I'm not putting millions. There are people like Grant Cardone and these other guys, running around that are putting tens of millions of dollars into advertising their channel to make them famous. I don't have these teams or anything like that. So to go through these emails. So ninjabrohawk@gmail.com if you want to share it and then put, I did the $10 super chat so I know I can scan through it. Okay. I'm trying to answer emails. It's almost impossible. Okay. All right, here we go. Here's the story. And I want to thank the 178 people who hit the thumbs up right now. We're at like 20% thumbs up. Thank you so much. It means a lot. All right, here we go. This is from a subscriber. And he says, I have a friend in a relatively high position at a certain bank for 28 years. I spoke with him this weekend in depth about everything you have been hammering us for the last few months. I may have struck a chord with him asking to dig into what his bank doesn't have to report as a Class 4 bank that the Class 5 banks do. He seemed clueless to the environment. His biggest notice, now get this, was that he had only produced 2 loans this year. We're referring to commercial mortgage-backed loans, commercial loans, big loans, all right? He might, it says right here, he's only produced 2 loans this year. He might get a third soon for $250 million, okay? These are big loans, okay? This is someone high up at a bank that's dealing with big lending. 250, he may get a third loan this year worth $250 million. It's a commercial loan. Pushed through this week. Whereas he did 27 of those commercial loans last year and 57 the year before. Let me stop there. Think about those staggering numbers. If he has that many less loans this year as opposed to last, and then that many last year as opposed to 2 years ago, think of how little money is coming into these banks now. All right? But again, this gentleman, as high up as he is clueless to the environment. All right? This is where banks collapse because everybody has this feeling, very few people, but what I'm going to share with you a couple of memos from the CEO of the bank. All right? And I do not believe the CEO is clueless at all. All right. So okay, he may get a third loan this year worth $250 million. Last year he got 27, the year before 57 himself alone. See, then the subscriber says, I get this screenshot email this morning from him, because now he struck a chord in him because this banker went from clueless, like, no, this is normal, to the questions he's asking. And the subscriber said he was using me as an example of these things that I'm telling you are causing banks to fail. So then the banker sends him a screenshot of 2 memos or 2 notes sent to all of these big loan producers in the bank. All right, check this out. He said, I get this screenshot email this morning from him, from the CEO. It's hard to interpret, but reading between the lines, I think is damage control to prevent panic. I could be wrong. I don't have the capacity to dig into this bank's financials too far, but you might have to have the network that can. So I'll be putting out a video, news related about this bank in a little bit, and a calling to anybody inside to give me information, okay? But I can't do that right now. So here we go. Here are the screenshots of the email sent from the CEO to this banker that's now having his eyes opened up. And he's probably watching this video freaking out, but I'm not talking about the bank. I'm not sharing any names. All right, here we go. Let's do this. Here is the first of the 2 screenshots. Names have been redacted. These are challenging times. Oh, wait, really quick. I'm not seeing the chat going on. Can you guys type 1 if you can still see this, if it's still active? Because it looks like my screen just froze. Let me know if it's active. But I'll keep going. These are challenging times, but we are holding our own, taking advantage of opportunities. Wait a minute, hold on. I think there's something wrong with the screen. There we go. All right, perfect. I had a setting wrong, sorry. Okay, here we go. These are challenging times, but we are holding our own, taking advantage of opportunities and positioning the bank well for future success. We are playing strong defense while continuing to invest in prudent offense. On defense, we've maintained one of the strongest capital ratios in the peer group. We have a strong consumer-oriented deposit base, and we hold ample reserves for credit losses. Let me break real quick. This seems like a massive cheerleading effort, that there are rumors already flying around that there's issues with capital, and this CEO is trying to keep his employees calm. Here we go. Let's continue. On offense, wait, let me stop again. Type 2 if you remember what American Express just announced in their last quarterly earnings, was that they had set aside a massive amount for losses, that they're expecting people to stop paying their credit card payments. Banks around the world know how tight the consumer is. They know what this upcoming student loan debt debacle is going to create. They know how much inflation has destroyed people's savings, and they are expecting, because credit card debt is at all-time highs, American Express is setting aside massive amounts of money to keep their operations going forward, as I think millions of people stop making their credit card payments. Now, think about how many people are going to have their credit destroyed and are not going to be able to buy homes as they collapse in price. That's one of the lessons I do in the real estate crash course. This is so obvious and so easy to identify. It's insane. And that's why you have to be ready for this. Let's dive back into this note. On offense, we engineered a major talent lift out from First Republic to take our private bank wealth management business to the next level. So they're already saying they were able to grab talent from First Republic, a bank that has crashed because it did bad things with its finances. It couldn't stay afloat. Okay, so they're bragging about how they're able to retain that talent. I want to also remind you, I want to say it's First Republic. I could be wrong. Put it down in the comments. But one of these banks that failed in the spring, most of their quote unquote talent were the people that ran Lehman Brothers. Think about that for a second. We're talking high net worth, high level bankers that ran that institution into the ground. Now they are in another institution that ran into the ground. And now this bank is talking about how they were able to glean talent from that. Okay, think about that. So they engineered major talent lift out from First Republic to take our private wealth management business to the next level. Our New York City Metro initiative is performing well. Nothing's performing well in New York. I'm telling you right now, it's an apocalypse over there for commercial CMBS. It says that it's performing well. On focus, our focus on capital will pay off as market conditions improve. Type 3 if you don't think that market conditions are not going to improve. Type 4 if you think they are. I think they're going to be abysmal and things are going to be bad. So they're hoping that things improve. And we will continue to be successful with, I can't tell you what that is because it's specific to that bank. We continue to invest in digital data analytics and AI, next gen tech, payments, ESG, and our people agenda. Okay, so look at these key words that they're using to try and boost employee morale. We've got AI. We're investing in ESG. These are all keywords. Do you think ESG is good for banks? I do not believe it is at all. From where I sit, it feels like the worst of the macro pressures are behind us, even though inflation is still out of control, and because it's not at the 2% mandate the Fed has, and the Fed is still raising rates. So I think he's wrong. Things are stable. I should be the CEO of a bank. That'd be awesome. But nobody in the bank would like me because I'd have way too much gold. Things are stabilizing and should start to improve in 2024. You know, when the official recession that all the bigger banks and these guys are saying is being announced. Okay. Leading to a strong 2025. See, what he's trying to tell everyone is please don't quit. Please don't quit. Like, please don't quit. That's what this memo to me is. We have the leadership team, talented colleague base, and culture to be one of the winners coming out of this period. I remain very bullish on our future. So does every other CEO the day before he closes his doors. Our best days are still ahead of us. Please maintain your commitment. Take care of yourself and enjoy our ongoing journey towards a building of top performing banks. Type 9 if you believe this is a bunch of malarkey intended to keep employees from quitting, looking for other employment, and your bank imploding. I believe that is the case. Let's look at number 2. This is the second screenshot. All right, here we go. All right, here's the next one. Labor Day weekend marks the end of the summer season and the commencement of a busy, real quick, for everybody who just jumped on, I'm talking about a bank that I cannot disclose just yet. I got to find some more information, but this is very telling, these memos from a high-ranking level loan officer in a bank. We're talking big money, commercial mortgages, you know, hundreds of millions of dollars per loan, right? That had only 2 loans done this year so far, maybe can ink out a $250 million loan, a third one this year. But to give you an idea, he had like 17 last year and 56 the year before. So the bank is hemorrhaging money because it's not bringing in the loan volume. All right. After a subscriber talked to the person, the banker's eyes, I think, are opening up real quick. And he sent screenshots of emails from the CEO of the bank. Okay, so this is the second one. Labor Day weekend marks the end of the summer season and the commencement of a busy sprint to year end. I hope you were able to take some time off and recharge your batteries while spending time with friends and family. Now let's get down to the real thing. This year has been particularly challenging, and I am very empathetic that many of you are grinding and feeling somewhat worn down. Because remember, these people work on commissions, all right? And they're not getting any. So the CEO is trying to reassure them, yeah, you're not selling the loans that you used to, and you've probably built yourself up into so much debt in your life, bought the big house, driving the Maseratis and the Ferraris and all that stuff, and now you have no money coming in, all right? So, but he's trying to keep these employees here. So check this out. Thank you for all your tremendous efforts and resilience. It's very much appreciated. We are navigating our challenges reasonably well, thanks to the dedication and strong performance of our colleagues. To show our gratitude and to provide you time to focus on your wellness, we are giving all colleagues a wellness day, an additional PTO day to be used over the next 6 months. Time away, 1 day off. They're going to give you an extra day off. Well, I mean, it's not going to cost the bank anything. It's not like you're making loans, right? So you're trying to encourage people to stick around, and there's obviously issues at the bank where people are stressed out, they're frustrated, they're upset, they're getting angry. So this is what the CEO is doing. I'm going to give you an additional day of PTO to be used over the next 6 months. Time away from work is important to ensure we are able to properly rest and recharge. And I encourage you to use your full allotment of time off, 8 hours. It seems like the regional banks have been in the spotlight this year. You think? Let me stop there and just remind everyone. The regional banks just collapsed at a level greater to the amount of all of 2008 combined. Okay? So don't believe a CEO. If you're working for a bank right now, let me just remind you or reassure you that this time it's worse. There ain't no getting around that. Okay? So it looks like the regional banks have been in the spotlight this year, facing pressures from many directions. The high levels of inflation in the economy necessitated very aggressive monetary tightening by the Federal Reserve Bank. This put pressure on deposits and funding costs, which resulted in failures of several non-traditional banks in our size category. I want to remind you, this is a bunch of bull, because those banks that failed based off of their commercial mortgage-backed loans. It all started with one of them coming out and going, we were tied to crypto, but the others are CMBS. You want to know why we know this? Is because the FDIC even admits that as these banks are being forced split up, the one asset that none of the banks want to take is the commercial mortgage-backed securities. All right? These are underperforming or non-performing assets. And this is serious. This is why I brought this information before anyone on YouTube, anyone on social media, 2.5 years ago now, and started warning that this is going to be what takes down the banks. This pressure on deposits and funding costs, which resulted in failures of several non-traditional banks in our size category, unfortunately, the regulatory response seems overly severe, and the rating agencies have threatened ratings downgrades. This is what's scary, is the CEO even has to be reminding or telling his bankers, his loan officers, this info. Loan officers should know what's going on, but they don't. A lot of them are clueless, just like they were in 2006. It says, and the rating agencies have threatened rating downgrades. Regional bank stock prices, including ours, have sold off. Again, this challenging macro backdrop, adding stress, has come from our significant change agenda, as well as several recent tech incidents. Isn't that nice? He likes to sort of push it off. Oh, it's the Fed doing this. Oh, it's the tech. No, it's not. It's you. You got over leveraged. You did not have the proper ratio of deposits in the bank. You're now running to the Federal Reserve for their repurchase opportunities. But hey, go look over here. It's the great magician. Don't look what I'm doing over here. Look what's over there. Tech is crushing it, and the Fed's crushing it. Not us. Not our fault. Hey, But at the same time, we were able to glean all this great talent from the bank that failed. Isn't that just great? Now I'm going to answer a question that so many people ask me, because as these banks are failing, they always ask, I have my mortgage tied, or I have a loan tied to the bank that you're talking about. What's going to happen to my loan? And here's the answer that no one's going to want, or no one's going to like, because a lot of people ask this not because they're afraid they're going to lose their asset as the bank goes down. They're hoping that their loan is going to be null and void. When these 4 or 5 banks failed this last spring and the FDIC pulled in, this is what they do. They go to other banks and say, okay, you need to pick up their assets and you need to manage them. And so they look at their loan books and they look at your mortgages in that bank and they go, okay, someone owes $250,000. This is AAA rated paper, AA rated paper. And they are, because they're current on their mortgage and it's at X amount of percent, who cares if it's 3% or 5%? The banks sit there and they go, we will take over that and we will pay pennies on the dollar for that. And they will now become your servicer or the owner of that debt. And so a lot of people are like hoping that there's going to be this debt jubilee and that their debt's going to go away. No, wealthy people get that, not the paupers. And that's what's very important. I know people that are living their life like the end of the world's coming tomorrow and they're blowing money, or they're thinking that a white knight's going to come and pay off their debt because these banks are to fail. That's not going to happen. That note is securitized and has a value. It has a credit rating, and it will travel around, even if it's at junk status, because let's say you're behind in payments, someone is going to get the right to take your asset, your home, if you don't make that payment. So if the bank fails, nothing happens to you in a good sense. You still have to make that payment. And that's one thing that most people do not understand. And that's why you need to be prepared for these crashes. I told everybody in the real estate course and everyone that owns the crash course, they're getting ready, and I'm getting great feedback from it, from real estate agents, from real estate brokers. I get it from people just have a handful of rentals. I have people that have never bought a house and now they see the way that those lessons are taught and they're going, oh my gosh, this makes so much sense. Why I need to wait, why I need to pivot at a certain time, and then when I need to jump at a special time. Everyone that has a course, I just uploaded a new lesson under the bonus content. And I've got another one coming out next week or week. Actually, it'll probably take me 2 weeks. That's going to save everyone about to sell their homes a lot of heartache and a lot of money. It'll save you thousands and thousands and thousands of dollars just doing one step differently in the selling process and the escrow process. It blows me away that most agents don't even understand how to do this and consult their clients on how to do this. But I'll put that lesson out now, in a couple of weeks, and I'm excited to put it out. And I'm excited to keep teaching you how these things happen. I'm going to get more information on this bank because the last thing I need is the big boys getting upset that I'm causing panic in banks. But we're just going to start following the news on this bank, and you're going to figure it out real quick where it came from. I've got some really exciting videos coming out. I think tomorrow or the next day, I'm putting out a video on what's going on in the adjustable rate mortgage market, and it's an actual whiteboard video. It's going to blow your mind. And if you think that this is going to be better than Great Recession, it's actually way worse. Just the sheer numbers of adjustable rates are out there are insane. So I'm going to bring that video out, and I thank you so much. Thank you to everybody that supports this channel and shares these videos. You have no idea how much you mean to me. And I can't wait to see you guys in Las Vegas. There's a lot of people coming to Las Vegas. I'm nervously excited. This is going to be really awesome to have all of you in one room. I hope you guys have a great day. The Economic Ninja is out.